And good evening, good afternoon, and good morning, ladies and gentlemen. Welcome to the Elite Traders University presentation of the Pip and Run market map, the money map for this week. This week starting the 28th of May 2017. And it's so good to be with you here, and just getting ready for Memorial Day weekend. Already in the middle of Memorial Day weekend. I want to go ahead and quickly record this and get this out to you. So even though it's a holiday here in the U.S. in which we celebrate the men and women of the armed forces of the United States that have served, both present and past, and my acknowledgement of their sacrifice. So even though we have a holiday here, while we're throwing some hot dogs on the grill, or kicking back at the beach, and just enjoying a lot of the great weather that we're having, the markets in other countries will be online and trading. Some will have some holidays as well. We'll cover those in a minute when we get to the Forex calendar, the calendar, economic calendar for this week. Okay, but let's go ahead and dive into it. We've got a very light news thing going on here. Not a whole lot going on, but we're approaching some significant technical levels. We saw the yen pair sell off Friday. We also saw the euro sell off Friday as well, and we'll talk more about that in just a moment. But first of all, I want to make you aware of and put your attention to the risk disclaimer on your screen. Make sure that you understand all the risks associated with foreign exchange trading. And for those of you who are brand new, don't know who I am, my name is Greg McLeod, and I'm one of the leading traders and trader coaches, mentors, and I'm the CEO of the Elite Traders University. I've been trading for over 21 years, and I've traded options, futures, stocks, and Forex. I'm the foremost authority of short-term day trading and scalping. I spent 8 years as a currency analyst and trader coach at one of the largest retail companies in the world, and also was a trader coach over at Daily FX. So 16 years as an instructor in public education, and also worked at a prop trading desk and also a top tier bank. So I am uniquely qualified to basically help you be successful in trading, for I'm a success and my students are successful. And I share my insights with you every week with this broadcast to tell you what my ideas are in the market, to identify key levels of support and resistance, and we can go from there. And hopefully this will help you in your trading, give you a map, a plan in order to approach the market. So you'll know, like, hey, what am I supposed to trade this week? Well, we're at a key level. Maybe this is the area that we should look at. Greg pointed that in the video. And you can see that a number of the key areas which I pointed out last week have come to fruition, okay? Including the dollar sell-off from that head and shoulders that I showed you, okay? So let's go ahead and get to it. And again, we're going to look at key levels of support and resistance. We're looking for possible scalp entries. Even though I'm looking at longer term charts, ladies and gentlemen, I'm looking for target areas where there will be big turning points. Turning points are where I get in, where I don't have to stay in the market so long, right? So it's very important to know where these areas are, so we can know when to get in, know when to get out, and move on to the next trade. Okay. So I want to start with the top of the list, and I want to start off with my old friend, the U.S. dollar index, and this has been our theme that I've been talking about for the last couple of days. The DXY, or the Dixie, as it's affectionately known as or called. And this is a daily chart, and I can see that we have this head and shoulders pattern shown at these yellow, that we have a right shoulder that topped out around the 102.05 area. We hit a high on January 3rd, 2017, 103.79. That was the top of our head. They have a pattern, and then we dropped down here to a low about 99 and a quarter, and then we rallied from that up to a high on March 8th, about the 102 and a quarter. Okay, so basically we have a stopping pattern, price unable to make a new high. Uptrend is defined by higher swing highs and higher swing lows. We had a higher high here and a higher high, and then we had a lower high. So that kind of tells you, warning, danger, Will Robinsons, we have a reversive trend going on here, right? In fact, we can draw a downward sloping trend channel. Say that 5 times fast. Downward sloping chin channels. Oh, my mouth is twisted here. Okay, so there we go. So there is our downward channel that we have and price turned. We had a neckline. Now, a number of people probably got short on the break of the neckline. Then we rallied up, and then probably nice stop run right there. Price continued to meander down below that whole round number, the 100 area, and gap down with the French election, and that continued to fuel the move as the euro went. 50% of the dollar index is the euro and the European currencies, and so that's why the euro is the anti-dollar, which we like to look at. And so right now we see this nice breakdown, and we broke the neckline cleanly. And ultimately, when you measure the top of the head, when you train the head and shoulders pattern, you want to find out the distance between the top of the head and the neckline, and project that out, and then that's the projection. So basically, I took that line and matched it right here to the breakout point, right? And we got about 94.49 is probably where we're gonna go, if not lower. Now, what's going on here? But nothing falls in a straight line. It did fall for a straight line, but these guys that got short got to take some profit, and this profit-taking move up may bring us a little higher. Manic Monday, and then turn around Tuesday, holiday. So we may rally back up into this 98 area. You might get a little bit of a rally, which will give us an opportunity to look at the euro. The euro will probably sell off a little bit because it'll move in the opposite direction of the U.S. dollar index. So we might see a little bit of a rally, right? We might see a little bit of a rally, but to the 98 area from there, then we could see a break down lower to our target, about 94.49. It might take a little bit to get there, but there's a lot of pips between here from this 97.35 to the 98 area, and there's plenty of pips down to the old low of 96.88. It might get even a little bit of a break, and even if we get 98.50, that's a good bit of profit there. So there's a lot of profit in here, but if you get short here, that's the problem. Price goes up, and then you get dinked. Okay, and then we can look at maybe a 1 hour chart. Even though unless you're a futures trader with a lot of margin, you're probably not going to trade the U.S. dollar index. I don't know anyone who actually trades the dollar index itself. I just use it as a big indicator. And here we have an inverted head and shoulders here. Shoulder, head, shoulder, an inverted head and shoulders pattern. Okay, and then we just broke a neckline. So this is kind of bullish, short-term bullish, right? Remember, things don't move in a straight line. This is on a lower time frame, a 1 hour. We're actually bullish. Okay, that was our neckline, and then we can add our shoulder, and this is our right shoulder here, and then our head right there, right, and like that. And then our left shoulder is here. Oh, I need to get that line again. So we got this head and shoulders pattern, and we broke this neckline. This is very bullish. So that is telling us that we should get a move higher. Then we can take a measurement. We can measure the top of the head to the neckline to get a line, right? And then we can clone that line, clone it like a sheep. Okay, clone, and then once we clone it, we go to the neckline breakout area, which was here, and puts our line there, and that gives us a possible target. Remember, everything is possible and usual. We deal in percentages, not absolutes. But Greg, you said it was gonna go there, did you? It may have a strong likelihood, my friend. Oh, okay. Remember, we deal. So this gives you a good idea. Right, and I said 98, 98.12. Okay, I was doing that from an eyeball, and that's the projection target. Now, what that would mean, because you probably say, well, Greg, I don't trade the U.S. dollar. Why do I care? Good question. All right, now we're going to turn this baby upside down, and we'll get the euro. Watch this magic with the power of letters. Boom! Look at that. What do you see? An inverted head and shoulders pattern. Pretty cool, huh? Yeah, and I can chew gum and walk at the same time, right? I got the skills that can pay the bills. All right. You guys probably say he's a poet and don't even know it. And don't. There you go. Here we go. So here's our other head and shoulder pattern there. And if you enjoy this, feel free to share this video with a friend. Not too many, but go ahead and share it with a couple of your close friends if you feel this is beneficial. And there we go. So here we go. So that's our head and shoulders. If that's a bearish pattern, here's our neckline. Right? I mean, you could probably say, "Oh, this is kind of a neckline too," but I'm just gonna take this one. I'm gonna take some people call it king's crown. Shoulder, head, shoulder, and then so it's real simple, right? How do we find out where the euro can go? Well, most likely it's going to go down. But there's a probability, but however, I'm going to put the however in here. If we get above the right shoulder, this invalidates the pattern. The right shoulder is one spot at 1250. So a break above that invalidates this, and you can say, look, these patterns don't work, Greg. See, I told you so. This is the I told you so zone, right? ITYS. I told you so, right? So this is the I told you so zone right there. So if we break above that, good night, buy the euro, it's going up, right? However, this, according to Thomas Bulkowski, who wrote the Encyclopedia of Chart Patterns, and he has a percentage assigned to each of the patterns. This has a high probability. I don't know the exact percentages, but you can go to his website and stop by and take a look what he got there. But this is a high percentage pattern. Why? Because bulls are running out of juice, they're making a lower high, we're tired, and the bears jump in and this kick butt all the way back down. Okay, so that's how that works, or how it's supposed to work theoretically. Okay, and there we go. So we measure from the top of the head to the neckline and get that projection line, and then here I'm going to clone it, and that way I get an exact duplicate of this line that measures like a yardstick, right? It's like a little yardstick. And I take my yardstick, I'm going to measure from the breakout point. I know there's a breakout point here, but I'm going to take this one here, right? It'll be more conservative to take it from up there because guess what? If I pull it back, that means a higher target, right? Now I'm going to put a horizontal line at the tip of that. I'm going to put a horizontal line right at the tip of that line, and that gives me the target. Target should be 1.1085. Okay, well, that's pretty good, right? Is that about 100 pips? About 90 pips? 92 pips? 92 pips from there is not a bad take. Okay. Plus, if we do a risk reward, and in fact, that's the old low that we had back here on that is the May 18th, 2017, right? So this is like one of those babies where you're like, hey, I got about 5K. I'm gonna put on there. I'm gonna put my stop somewhere above. We might get a little bit of a rally, so we want to put a little bit of space in there. Put a stop above the swing high, and then target down here, and then you'll get a pretty good. I want the short positions. Do we have a short? No. Short position. Okay. So let's say we take a short position on a break below the low. Let's do that. Ooh, and then move our stop, maybe like that. Okay, and then that's how that trade will look, right? All right, so that's the euro. Now, euro usually, it's always the other currencies versus the U.S. dollar, so we can possibly look to some other things too. But let's actually, I want to switch charts. I know I'm going to go to eSignal. Right now, this is the daily chart. Lots of lines here. I had to add some lines because we were in a nosebleed new area. We came short of that 1.1300 area. Fell short of that, and so we didn't have any lines there. So I added 2 lines there. Okay, and let me go ahead and enlarge this. Pause. Okay, so I had to add a couple of lines here because we were in the zone. We fell short of the daily support line, which I drew back in February, 1.1304. And eSignal's labeling this is a wave 3, and is looking for a pullback, maybe even down here to 1.08388, which could or may not come to pass. Okay, see a lot of lines here, right? Remember, I want these long-term support and resistance lines in place. That way, when I drop down to my lower time frame, like my 240, I'm gonna see. Okay, now these two lines were not here. I had to add those. But what happened was this line was drawn from back in February. Price broke above that, came back below it, came back above it. So this was a significant line, right? We didn't even hold above. I think one day we did, but for a very short amount of time, and came back down. And so now we're sitting here. Now he signals like saying, "Hey, this is probably gonna go back up," and it could, right? That's that possibility. I said if this thing broke above the shoulder, we could go much higher. However, if we break down, we can stick a trend line on this, put a trend line across the bottom like that, we might get something where we get a breakdown below 1160. Let's call it 40. If we get below 49, and the 50 is a whole number, round number. 1150 is a round number. So when we get like 48, 47, 44, 43, 42, we're probably going to break down lower. And this target here, this old wick down here, 1.10764, may come into play. Why? This line was drawn back in February. Price came back and tagged it in May, and so price may come back and retest this line, this demand zone area, over time, then maybe next week. Okay, we might see like on a Sunday, Monday, I'll rally up, right, and we could be able to short it maybe at 1.222 if we get a retest of the line, maybe a test of that high, 1.1235. And double tops there, we could short it from there for a move back down. Okay, so I'm looking for. I'm short-term bullish for short term, like like Monday, and then Tuesday for the rest of the week I am bearish. If we come down into the 1.100 area, I'm going to be bullish again once we get back down toward the 200 moving average. A lot of this overbought condition is to be unloosed, and then it'll reset, and then we get a nice target to the we might get a target down here. Let's see if we can do that. Can we do that? If we can take this and yeah. So look at that, the 1.618 and down. Ooh, all right, downward target looks confirmed. However, and then we could probably see that 2.618 at 1.0970 come into play over time. All right, let's just go down to a 1 hour chart, and I'll spend a lot of time on the euro. The euro is one of the most widely traded currency pairs, and we can see this come down here. So this is in fact, it labeled as a wave 5 as the finishing touch of a big uptrend. And we may see further moves down. That's what's looking at. The 200 moving average is probably where the make or break line. If it gets below 1.1141, that may really things start kicking down. And I said break below 50, right? 41. That's the 200 moving average. If we break below that, we should have a clear sailing down to the low there. Let me know about that trade. Give me an email, Greg at EliteTradersU.com. Send me an email and let me know what you think about the trade. Okay, I did post some trades earlier on Twitter this week, and I'll see check your email, and I'll send you an update, show you how we use the My Forex heat map in order to find a great trade setup. Posted on Twitter, and went down for 30, 40, 50 pips, and people got paid. So it pays for you to follow me on Twitter, follow me on Facebook, subscribe to my channel on YouTube, or just subscribe and become a VIP Pip and Runner, and be in our Pip and Run live group right there. And that's where I post our trading ideas right there. In fact, that's the trade I posted. I posted dollar yen. I said it was at 111.46, possible short below 111.44, target 111.20. Yen very strong in the My Forex heat map, and there it was. It was showing up pretty strongly there, and it's loading. Oh, yeah. So it was loading. Okay. So yeah. So that was our red. It's in the sell zone. Green is in the buy zone. Gray, stay away. It's in sideways. But we had the New Zealand dollar and yen strong, and I took that trade based on that. You see 111.46, and then boom, that's what we had. We had that drop, and if you saw it, if you caught it, congrats. In fact, we had a couple of people that actually got paid on that one. Okay. And I also had trade alerts from other currency pairs as well. So I post in here. You can become a member of this. Just subscribe to my Forex heat map. You can just subscribe to it for $1 for 7 days. If you like it, you can go ahead and join, and you'll be billed monthly. Or you can save a bunch of money by just getting $199 for the year, and you'll get access to our chat room, access to the my Forex heat map indicator, and also a host of about $9,500 worth of bonuses. Okay, all right. So let's keep it going, keep it spicy, keep moving down here to the next currency pair, and we do have some Canada data coming up. I want to go to the Canadian dollar because we do have probably the most significant data is coming out of Canada and Australia this week. So we want to take a look at what's going on with the loonie, possibly with the dollar being weaker. You can probably see the Canadian dollar go a little bit lower. So again, we look at our daily chart. We can see that's meandering kind of like a sideways formation ever since we had a high back up near it came really close to our daily resistance line 1.38067. But then we just fell off the boat there. Just kept on diving lower and lower and lower and lower. Okay, I'm gonna clean up these lines here. I got some. I trade off my. I usually just save this chart setup for you guys, and I try to keep it pristine and not have a lot of stuff going on. But sometimes in the heat of battle, it's like, give me a chart, it's moving. I have my alert here. We broke through the alert zone and then kept on dropping. Okay, so we had this downward move, and we have kind of an inside day. I know it's kind of a reversal pattern going on there. So we got a little bit of a retrace. Let's go. Let's go to I'm going to go to the 60 because we spent so much time on the euro. I want to cover everything, and you can see how we did do this drop here. Right, came down to a level of support 1.3388, and we rallied up, moved sideways across this 138.41 area, and then price has dropped precipitously back down, right down to another zone, another line, and then now we're just hovering here. We're just moving sideways across this line. Now we may come back down and test this 33.90, right? So that's what I'm looking at. I'm looking for some sideways consolidation. If we get back to if we do rally higher, I would want to be ready to short it at the. I'm going to make this a different color so it's not a daily line because this is an hour chart. So what I do is I'm going to edit that line and just make it another color or change the texture on it. That way, it's not considered my. So let's make it a dotted line. How about that? Okay. So this is my dotted line. If price can get back up and tag that and give me a double top, double tops are great pattern setups. Okay, I love double tops and double bottoms. I just can't lie. No. There you go. So there is your double top, short there, and a drop. And then we look for that drop back down to about 33.84. Okay. Now price could exceed and come back, and there is a 200 simple moving average and the 35.25. If there are a lot of stops there, price might snoop around and go, hey, there's stops there. Let's go and get them. Delicious. And you're like, oh, crap. And then after he eats the stop, then it turns around and drops. Okay. Sometimes you'll see that. Especially if it's like, ooh, you've got a 200 simple moving average, and you got a couple of daily lines of resistance here, and someone will probably place their stop right there, rather short. Right, they got short here, they're making money, price is rallying up. Long as price stays below the 200, they're good. And what happens? Price comes up, finds all that liquidity, hits all those orders, right? All those buy orders, and then turns back down and drops. So I would be a little bit careful and just wait for confirmation. Okay, but I have a bias for the short. Okay, after maybe a little bit of a bounce. Okay, so maybe a bounce higher than a short. Like I said, the high could be 35.00 to 35.27. Now, if we break this 34.34, then 33.88 looks nice. Okay, moving right on, keeping it moving, keeping spicy here. I'm gonna go to the British pound. I should just go in order, that way I can just make sure I give a good coverage here. And here is the Kiwi dollar, and let's go to our Kiwi's on a tear, and usually kind of lump Aussie and Kiwi together, but Kiwi's kind of like doing its own thing. You know, we got like a budget surplus out of Australia. Go Kiwis, go! Kind of hard to hold a good Kiwi down. That was like the guy I told Garth. Because we got a nice 3, 4, 5 pattern on the daily chart, and bam, this thing launched up from this. I mean, you had 2 levels of daily support here. 68.30 and 68.16 came through, could not get through there, could not penetrate. Reversal candle pattern, that morning star pattern, and then bam, right to the 200, and we're sitting right at the 200. Remember, I told you that bulls live above, in the bullish neighborhood. The uptrending neighborhood is above the 200 moving average. The bearish neighborhood, the ghetto, that's below the 200 moving average down here. Okay, so that's where they reside. So once we get above here and start clocking it, then price continues to roll much higher. Okay, but we have been moving up quite a bit, so there could be some profit taking. Let's go ahead and go down to the 4-hour chart and just take a quick look see. And you know, I mean, it's kind of outstretched. You know, it's been going up for quite a while. We do have 70.88 we need to clear, and if we do, then we got overhead resistance to 71.08 and 71.25. I'm gonna go down to a 60-minute chart just to see what kind of pattern. And you know, so there we go. We got a 3, 4, 5 going on here, and if we get a break below, say 70.41, we can come back and tag 70 the figure, and the 200 moving average is 69.81. So we could come back down in that area, the 69.95 to 69.79, 69.80 area, right in here, if price can stay below here, right? And you can say, well, Greg, it's an uptrend, higher swing highs and higher swing lows. Yeah, but we do have prices. We're making new highs, but you know, it's like barely making it. And so, but I would be bullish above the old high. So if we break above the old high, 70, 76, then we got some more to go, right? But this does look like a topping pattern. But we're not at any key level. You know, if we were at this level, we could buy it. If it was at this level, we could sell it. And right now we're in no man's land. So I would want to be able to either buy at key levels or sell at key levels, and we're not there. But Aussie, I mean, New Zealand dollar has been very strong. Let's go to Australian dollar. Australian dollar is, man, I may can get rid of that one. It's one of my alerts. I was like, this is not going to hit that for a long time. Or maybe. Let's go to a daily chart. Start off of our 50,000 foot view. This is our satellite view from outer space, and we got our big wide view. You know, we had this big double bottom. We've been spinning for in a forever range. You know, just stuck in the middle with you. Clowns to the left of me, jokers to the right. Here I am. Okay, here we go. So we're stuck in the middle right here. Just a big range, and he's got all those levels. Well, Greg, these levels. Don't worry. Just drop on down to a smaller time frame to I'm gonna drop to a 30. Okay, and then we can see that price respects the lines. And I've got some other stuff there you can get rid of there. Opening range breakout. I took the breakout north. Yeah, that was cool. All right, it worked. All right, so here we go. Prices came down and rallied back up to the 74.57 area, and it looks like it wants to. I mean, it's hanging there. I mean, we had this bullish move here at the end of the day. So you figure this was a big bearish candle. Bears are in control. They were probably looking to try to tag this old low. They're trying to capture them. Get down to the valley. and they didn't. They got driven back. I mean, people start buying it and left that wick behind, and all these bears are like, "Oh, dude, help us!" It's like, "No, man, sorry, no luck, dude." Bulls are in control. Kind of a bearish reverse, a bullish reversal. So we could see, a bullish move back toward maybe a retest of the old C high here, 74.61. The 200 moving average is right there, hanging out about 74.59. And that's a goodly amount of pips, maybe about 14, 15 pips, but nice scalp to the north side. And then the daily resistance comes in at 74.64, right? So we've got this line. Again, this lines I drew a long time ago. These are lighter, so I might have drawn them maybe a couple months ago, but still, price has respected that area, and it could be a good target to go for. Not Walmart, but Target. Okay. So let's keep going. Now let's go to British pound. I don't know how I skipped over that. Don't mean to do that. All right, cable. Let's take a look at cable, guys. Cable call. All right, cable. The cable guy's here. I remember there was a guy in the forum. He was a cable guy. It's cool. I just like calling his name out when he came in the chat in the webinars. Cable guy's here. All right. Now it's like cut the cable, right? Cut the cable. So here we go. Higher swing highs, higher swing lows. And we got about that 200 moving average, right? Remember, bulls live above. Well, it looks like they couldn't afford this neighborhood, and they're moving back down with Brexit and the election woes coming in, and the narrow majority coming to Theresa May. And that's the smaller her lead gets, or the more the pound sells off, right? And so we could see the pound under pressure, maybe down to we're currently at the 1.2854, maybe a drop down to the whole number round number 1.2700. Okay, but it's still in an uptrend, and it's that 200. Sometimes you get people trying to test it out, and the pound's been pretty resilient. Never count the pound out. Okay. And here we go. In fact, it's such a sell-off, and look, we sold right off to a daily support zone, 1.2772. We might see a rebound back up to 2871. That's about 100 pips. Not bad. Maybe 97 pips. 2913, even better. If we retrace that whole entire move, we get back to 2951, and that could be very tasty. I took the pound yen short in the same this way, and this is broke, and I posted that too. I don't know if you guys were, if you were, you enjoyed. I have trades of the day. Well, I have them organized. You can go here and move this over just a hair. Okay, trade of the day. You go to trade of the day, and you click that, and then all the trades of the day are posted. And I did pound yen. See, pound yen 146.78 bounce from channel support. No, that's my upward. Where's my sell one? I had a sell one. Oh yeah, this is. No, not that one. Not that one. They should be ordered by. Oh man, pound yen has been. Oh, right here. This one. That's dollar Swiss. Or maybe I posted it in the pound yen. But yeah, it was a pound yen. There was some consolidation and trend line break. And I said, hey guys, we need to lock and load. Let's get on that. And we look for that move. And sure enough, we got that. We got it. It might have been. I might have put it in the yen pairs. Yes. Okay. Yen pairs. Yeah, that's it. I'm pound yen short at 144.66. Looking for a drop down to 43.96. Been in it for a while. Let's see it get from there. And so there was the setup. If you can see it. And there was a topping pattern, and then I was looking for that as my target. Limited out. It was a beautiful trade, right? And we had some friends over in there too, right? And I said, hey, starting to move down. Anybody trading pound yen? Eric goes, woohoo! Indeed, took it down 44 to 59. Okay. Oh well, yes, I did. Greg closed it at 43.95 too early. And I congratulated them. Okay, so that's the kind of thing that's going on in the Pip and Run Scalpers Club. And remember, you can you can go to the My Forex Money Map website, and you can just click the button, and you can subscribe for a dollar. Not much you can get with a dollar these days. You know, in fact, with Trump doing his thing, the dollar could be worth 50 cents by the end. So you better use that dollar while you have it. And there you go. Just click that button there, and then you get that dollar trial right there for 7 days, and that's pretty cool. Okay. All right. Let's get back to the charts. And yes, and yeah, a bounce here from here, 28. This looks, constructively bullish because this is oversold. We expect a 4-wave decline. Probably should stop around the 2880 area. Let me move this over a little bit. I can't see that number. Yes, yeah, because if you get one or two really cool trades out of the group, you pay more than paid for the annual subscription. So just think of it as an investment. So. And I don't mean to be salesy or anything like that, but hey, why not? Let's go ahead. And so I'm looking for a bounce. Okay, we're looking for pound. We're looking for Aussie. We took a look there, and I want to take a look at the yen pair or the Swiss franc. Swiss franc is kind of like, well, it's just like the euro, but in reverse, right? It's like and so it's been dropping, and look. Even this rebound I was looking for, that's all we got on that rebound. We did get a rebound, though. I did predict the rebound. It was a little higher than... it only got up here, 97.60. Let me enlarge this, but I can't see that, Greg. Well, there we go. See that? So a little over. But no, in fact, it did come up a little bit higher. But we came down, and that was my target, and... we hit around that zone a couple of times, about 90% of the target right there. So we might see this bottoming pattern and then a little bit of reversal as well, and we'll see. The downward trend, this thing is still in the ghetto. It's in the bearish. It's in a downward trend. It's going down. And forgive me if you guys are offended, but hey, I taught in the ghetto, so I have every right to be able to say that. So this is going down. This to give you a visual representation and get it clear in your mind that I shouldn't be buying this. If you're buying it, this is like a scalp, short-term trade, looking for a rebound up to one of these areas here, right? One of these Fibonacci retracement zones. But probably the 200 moving average is about as high as I probably think it will go, 98, 93. Getting short here is not good either. Just because it's a downtrend, if this thing flattens out, you can get creamed anyway and have price move against you. So the whole idea is, in a downtrend, you want to sell upward moves. Okay? I know it doesn't make any sense, but you want to buy low and sell high, and you want to sell high and buy low. And I don't mean go get a joint or get some crack or something. No, sell higher than what price normally is, and then buy back low. Okay? All right, I hope that was clear. Like, this guy is Greg is clear as mud, man. No worries. It'll become more. The more you listen to me, the more it makes sense. Right. All right. So we've got this double bottom here, and in fact, like I said, this is this triangle looks real tasty for a possible long. Okay. For a scalp, I'm just looking for a scalp, guys. I'm not looking at this to go like 200 pips north, right? I'm looking to get back to that red line. That's all I'm looking for, right? And if I can get that, I'm pretty happy. 97.50, 97.85, 30 pips on 10 standard lots, $3,000. I'm good, right? It might not be, if you're trading 1K, you might be, hey, but it all depends, right? But all we want to do is find out. We have this consolidation, bullish and a big bullish reversal candlestick pattern coming up above several daily support lines, resistance lines. Just broke it, and then consolidated like it's like coiling up for like a volcano, like it's going to erupt and boom, break to the north side. I like that for a scalp, dollar Swiss. However, it gets up in here, nosebleed territory, I would look for a possible short to actually blow out these lows, because remember, this is just like the dollar index. This, in fact, is the dollar index. If we were to flip this upside down, No, we don't have to flip upside down because this is USD CHF, right? So in fact, I'll show you. Like, Greg, I'm confused. Don't worry. Here we go. See, there's our head and shoulder pattern, shoulder, head, shoulder, just like I showed you. Then we had the break of the trend line, and then boom. Okay, so and we got that downward trend line, trend channel that I couldn't say 5 times fast. Okay, so there's your shoulder, head, shoulder, neckline, measurement, and we look. I mean, if you look at the measurement target on this baby, 94.47. Okay. So what we're looking for is a rally higher. Okay, maybe it rallies up to 99, but and you might want to scalp that up. But remember, the whole idea is you want to be able to sell it high, and then buy it back low. All right, so just keep that in mind. Okay, and the yen, we'll cover dollar, yen, and gold, and then we'll go on to the economic calendar. I hope you guys are enjoying this. If you have, guys, give me an email, give me a thumbs up. Let me know that you're out there and that you are learning, enjoying, and profiting from what I'm sharing with you. Because it just, I'm extremely happy. I start dancing on the desk when someone tells me how well they're doing with my coaching, my training, my teaching, anything I share. It's about me giving back, and it's cool because I'm spending my Saturday, telling you about some things I'm looking at, and and if you want to join the group and be part of our Pip and Run club, then it's small fee to get in, and it's a lot of fun. Okay, yen pairs. I'm just gonna go dollar yen. Even though dollar yen is like, oh my goodness, sometimes dollar yen is my friend, and sometimes like dollar yen you just want to like throw it out the window. It's like, what is wrong with you, dollar yen? And you gotta remember that it's a yen pair, but it got that dollar in there, and that makes it kind of wonky, right? And I'm just gonna do it because it has a lot of volume on it. But I'm actually gonna throw pound yen on there, or euro yen has been very sweet to me. I love euro yen. I've been killing on euro yen. Yeah. Here's I don't know if you can see that, but yeah. But this is consolidation, euro yen, trend line break. I was like, give me the money, pay me, just pay me. I love this pair, right? All right, let's see if we can find something similar like that for you guys coming up this week. If you missed that trade, don't worry, I'm gonna help you find one just like that. They happen all the time, guys. Here we go. Lots of support and resistance line. Okay, 240. I'm gonna drop to 240, and you can see. Breakout. We got a little rising wedge, breakout north, and let me clean this chart. And once I clean the charts up, I actually need to save them. That way, these lines do come back. They do come back to haunt, And so, let me go ahead and clean these. That triangle. We're still in that triangle. We have not broken the triangle. And triangle means indecision. And there's bulls and bears are basically they haven't neither side has really exerted any sort of dominance. So they'll win some, the bears will win some, and the bulls will win some, and the bears will win some, and we're just sitting around the 200 moving average. We're not in either neighborhood. So it's a great range trading if you're just playing pivots, daily pivot lines. It's actually pretty good. Buying S1, selling R1. When it breaks out though, it's when that's when you could do this for like weeks, and then when it finally broke. So when this is a consolidation too, and we might get some type of break. Usually, price breaks out in the direction of the previous how you entered the consolidation. What you talking about, Willis? What you talking about? Okay, so that's a consolidation, right? Now, how did price come into this consolidation? Did it come up from the upside or from the downside? Well, it came in from the downside. It came in. It entered in here, right? Came in through the back door, right? Came in here like that way. So when it comes out, it should come out that way. Usually, right? The way it comes in, that's the way it comes out, right? Except when you got at the top here, where you have consolidation here, you say, well, Greg, I see an exception to the rule. And there is always an exception to the rule. Where price came in this way and came out the other way, right? Well, that's a turning point, right? This is a trend change, right? But trend continuation goes in, consolidates, and we look for an exit. So break above below 110.50, and look out, Jim. We're at 108. Okay, so that's that was easy enough. And you're like, so well, Greg, I don't understand. Well, you know what? That's where education comes in, and if you want to learn how to read these charts, you need to learn from someone who's been doing it for like 21 years, and who can, I can take newcomers to the market and help them in 90 days become a proficient and profitable trader. And I don't say that lightly, because I have testimonies and documented evidence to show that. So make error of this, cut, remove, okay, remove, and save all these pages. Save all these pages, because you don't want to do this all over again. Okay, so here we go. 24.20 is euro yen, and a lot of consolidation there, and we should exit below 24.20. Look for a move down to 23.68, right? And we could probably keep going down to 23.25 and retest the low at 22.60, right? So that's what could happen. Now with North Korea launching successful rocket launches is not going to instill a lot of confidence in Japan. The Japanese, who will probably move their money to some place where it'll be safe, like Japan. I don't know why, because that's probably going to be the target of whoever's firing the missiles. It's probably going to be Japan, right? But anyway, anytime we have any type of a fear alert or type of tsunami, war, earthquakes, or something like that, geopolitical risk, we see a flight to safety, or flight to the yen. Okay, so that's what was. Even though they have negative interest rates, like, look, not only you're miserable, you've got a war, famine, some type of geopolitical crisis, and you're getting negative interest, so you're just getting hit both ways, guys. Hello, put it in something else like Bitcoin or something, that's gonna go up. But that has been going up, and that could be a bubble too. That's a chart I don't have, but if you guys want to hear about it, let me know in the chat box. All right, so that's what I look for. I'm looking for a little bit of a bounce, and I want to sell the break below 24.20. Okay, I would love to sell at the 200 moving average. Sell high, right? Buy it back low, and I'd like to see this old low taking it out. But I want to be shorting this down several times, in and out, taking my money and getting out on the retraces. And you can get the Pip and Run workshop video, kind of like learn how to do that. It's a mini workshop. It's not the full deal, And so I have 9 patterns in the Pip and Run system, and you can get, I give you one of those great patterns, and if you have one of those patterns, you probably, you probably virtually just make all the money you ever want to make. However, if you are greedy, you want 9 patterns, then you can sign up for my Inner Circle Forex mentorship, and I can give you all 9 patterns, and you get to be coached by me on a weekly basis for 2 hours a day. Okay, let's get to the economic calendar, and it is somewhere here. One of my tabs is the economic calendar. Greg, what did you do with the economic calendar? I ate it. It was delicious. No. Economic calendar. Come on out. Come on out. The economic calendar. There it is. Okay, guys. We have G7 meetings are going on all day, and I guess U.S. does not want to participate in the climate change accords, and so that should be pretty negative for your environmental stocks on Monday. We have a Chinese bank holiday on Sunday, bank holiday for UK. They're off on Monday. Memorial Day for the U.S. And so there'll be, look for light volume, pretty erratic price movement, because everyone's off. Price is going to be probably either moving flat, not moving at all. And if somebody gets in there, they're going to become the market. And when they get in and get out, they're basically selling to themselves. So you'll see these big spiky, weird candles that go on. And then the spreads will go really wide sometimes. Sometimes you might see 10, 20, 30 pip spreads during these holidays. So be careful. It might be better for you just to fire up the barbecue and celebrate Memorial Day. Even if you don't celebrate Memorial Day, you'll save money that way. if the market doesn't chew you up. But anyway, if you do decide to venture into the market, we do have Draghi is going to be speaking at 9 a.m. And, there is a kind of a bearish tone on the euro, and so he might just say something to really set that baby off. So you might want to tune in at 9 a.m. Eastern time. It is a red high-impact event. The only high-impact event we're going to get until like a while. In fact, we don't get another one till Tuesday, 10 a.m. We have U.S. with Conference Board Consumer Confidence expected to come in lower from 120.3 to 120.1. The dollar is maybe on the dropping, broke some trend lines and going down to some targets. But we might see a little bit of a rebound, and so we'll see if this number comes out. This number could set us up for that, for some type of a rebound in the dollar. Then another high impact number comes at 5 p.m. That's the RBNZ Financial Stability Report. The funny thing about these New Zealand reports, always at 5 p.m., which is right when a lot of desks are closed. Banks are realigning their, the swap rates and things like that, and doing their banker things at 5 p.m. And so when you try to trade this, usually they got some wide spreads, or your desk is closed, and it's like, even though I like trading this currency, I just don't like trading at 5 p.m. So, but that's just me. Okay. Let's see anything else, any high impact things. There's some CPIs are good to look at. And this was going to be pretty interesting at 5 a.m. And the reason why, I know it's not a high impact red one, but anything with an I in it, that's, even though it means consumer price index, I think of consumer price inflation, right? It measures inflation year on year, expected to fall from 1.9 to 1.5, which is deflationary. And if you have deflation, means that the central banks will not be able to raise rates, or won't raise rates unless they see inflation. And if the rates don't go up, then the currency kind of goes down as well, because interest rates are one of the main drivers of currency valuations. So a lower CPI usually, quote on with the quotes around it, could bring a lower CPI usually negatively impacts the value of the currency. Okay, goes lower. For those who are like, what does he mean by negatively impact? Goes lower. All right, got it. Have a little fun here. It's Memorial Day weekend, guys. In Canada, we do, like I said, we did have some Canadian data. 8:30 a.m. GDP month on month expected to rise from 0.1 to 0.3. Now, it goes from 0 to 0.3. That's a kicker. We should see the Canadian dollar rally, especially against the US dollar. And so we could see a big move there. We might see something, might pair Canadian dollar up to the euro, too. EuroCAD. EuroCAD short might be a good one to look at, too. On May 31st, the last trading day for May. Last Wednesday in May, so that might be a pretty good trade setup. Look for Aussie CAD. Look at those CAD pairs. Find the weakest currency against the CAD, and that should be the grand prize winner. Okay, let's look at the 9:30 p.m. with some high impact data. We have the private capital expenditure quarter on quarter. Private capital, this is investment coming in to if that money is moving, it means people are optimistic. Good for the currency, good for the economy. Expected to rise from negative 2.1 to 0.6. Could see a boost in Aussie. Now Aussie's already in an uptrend too, so that could be a boon for the Australian dollar. Now a pair that I wouldn't want to trade is Aussie CAD. If we have strong numbers out of Canada, strong numbers out of Australia, Aussie CAD may just move sideways. Okay. So you want to pick strong versus weak, and in that Pip and Run workshop video that we have, if you're interested in that course, send me an email, and I can get you set up. I talk about strong versus weak. Now, so you don't want to pick two equally strong currency pairs, and you don't want to pick two weak ones either. Like two water balloon, like pillow fights. Nothing's gonna happen, right? So you want to pick the strong one and a weak one, and be long the strong and short the weak. Then June 1st, pound impact data is going to impact the pound. impact. I try to make an alliteration to kind of mess that one up. Manufacturing PMI for the pound, 4:30 a.m. supposed to fall from 57.3 to 56.5. That could be good for the for the dollar versus the pound. If you want a short pound dollar, this may be, if this number comes out as expected or worse, then we could see a good move down on the pound versus U.S. dollar. Okay. And then 8:15, we have the ADP, non-farm employment change, expected to rise from 177 to 181,000 jobs. And it's great because the ADP measures. ADP is a company that actually prints the paychecks, so they know pretty much if that number is going to be good or not. And if it does, it can be good for the U.S. dollar if we have a strong number. Okay, if it's better than expected, then it's even better. 8:30, we have unemployment claims, 239,000 versus 234,000, and that's supposed to be an upward movement. That could be negative for the U.S. dollar. And then we have the U.S. ISM manufacturing PMI at 10 a.m. expected to fall from 54.8 to 54.7. Then crude oil inventories. Now it's negative 4.4 million, which is a negative. It's a drawdown. It means that we're using more oil than we have available, and that's good for the Canadian dollar because it's all about supply and demand. The less you have, the more people want it, the higher the price, and higher commodity prices strengthen the Canadian dollar. And that's the COM dolls, COM dolls, New Zealand dollar, Australian dollar, and Canadian dollar, right? New Zealand is one of the largest suppliers, is the breadbasket of Asia, supplying milk and sheep and dairy products to Asia. And you got Australia, nickel, iron ore, gold. Then you have Canada with lumber, oil, and other building materials as well. Raw materials coming out of Canada, natural gas. So if prices of commodities rise, these currencies usually rise too. Okay, so let's move on down to Friday. That's the big day, the non-farm payroll day. Construction PMI expected to fall from 53.1 to 52.7 in the UK. That's at 4:30 a.m. Eastern time. Then 8:30, we have trade balance out of Canada. That's supposed to be improve from negative 0.1 billion to 0. Hey, better to be 0 to get to break even, right? That's good, eh? And then labor productivity is supposed to also actually tick lower. But let's get to the big numbers. Is non-farm payroll, and expected to actually fall from 211,000 to 186,000 over from last month. And the employment rate is supposed to remain steady at 4.4%. And so that might be pretty interesting to see if that number is where it's going to be like that, or this the forecast is they're forecasting a low number and then they surprise with an upward revision number, which would really give the dollar a big boost. Okay, so that's what I'm thinking. I'm thinking that they are shortchanging this number, and maybe the number is a little bit higher. So we might see something happen to the U.S. dollar toward the end. A little bit of a rally, counter-trend rally, where they can resell it next week or the week after next. So that's for June 2nd. Okay, so that's going to be it for that. And I want to thank you so much for watching. And let me know how your trading is going. Remember, I'm committed to your success and want to hear from you. You can write me at greg@elitetradersu.com. And make sure that you also stay tuned. Check your email for updates and trade alerts along the way. This is Greg McLeod from Elite Traders University signing out. Peace and pips. Cheers. Happy pipping. Bye-bye.